Hello there, you're watching Bizworld. RHB Investment Bank Berhad is expecting the automotive industry to see strong earnings growth in the first quarter of this year. This as automotive companies are in the final stretch of fulfilling the sales and service tax SST exempted orders. Some companies may absorb the SST if they fail to deliver the cars to customers before the registration deadline of March 31st. Given the surprisingly resilient orders on hand, the investment bank expects the subsequent quarters will also remain robust, with strong TIV in February and March. It anticipates this year's TIV to be at 680,000 units, supported by existing orders and new launches. This represents a mere 6% decline year-on-year, softening against the high 2022 base. The Institute for Democracy and Economic Affairs Ideas is urging the government to explore new sources of revenue in Budget 2023 due to be retabled this Friday. The Institute welcomes the government's hints that the upcoming budget will focus on fiscal consolidation and debt management. However, it said budget consolidation should not rely solely on spending cuts. With revenue expected to continue declining in 2023 due to moderating crude oil prices, it stated the government should consider revising the personal income or sales and services tax. A conversation around the return of a form of consumption tax will also need to urgently happen in parallel with the revised social safety net.
Utamaan demi kemampanan ekonomi.
Makmur bersama Malaysia Madani, iltizam kerajaan perpaduan untuk rakyat.
Cerakin dampak belanjawan 2023 bersama kami dan penganalisis.
Jumaat 24 Februari
Bermula jam 3 petang
hanya di TV3.
Disruptions in supply chains due to China's reopening, labour crunch, climate change and global geopolitical tensions are costing the Malaysian economy 8.7 billion ringgit a year. This is based on an estimate that supply chain issues are costing companies an average of 0.47% in lost revenue globally. According to business transformation consultancy TMX Global, over the last 2 years, Malaysia has had to grapple with various disruptions to trade and supply chains. For a country that relies heavily on imported raw materials for its manufactured exports, it meant that the production of goods was also affected. These disruptions hence have an impact on cash flows and bottom lines. The disruptions have also notably impacted semiconductor manufacturers as a result of the unprecedented global chip shortage. A survey has revealed that 80% of local investors have set up new financial goals, namely for retirement, keeping up with rising costs as well as holiday and major life experiences. According to Standard Chartered's report, Malaysian investors cited inflation, an uncertain global economy and the threat of recession as their top concerns. It noted that these concerns are also key worries for investors internationally. To outpace inflation, 61% of global investors are looking to reduce their cash holdings compared to 53% in Malaysia. Standard Chartered also predicts that global cash allocations will fall from 26% in 2022 to 15% in 2023. The report examined the shifts in investor decisions for more than 15,000 emerging affluent and high net worth investors in 14 markets, including Malaysia. Despite the sustained performance of selected exports and domestic-oriented industries in 2022, there are still downside risks to the sustainability of Malaysia's trade performance in the coming months, especially the trend in the output of electrical and electronics A&E products. Public Investment Bank Berhad said this is in view of softer overseas demand coupled with the anticipated decline in worldwide semiconductor sales of 4.1% to $556 billion in 2023 from $580 billion last year. The firm also believed the country's trade performance will trend in tandem this year. That's all the time we have for Bizworld. I'm Nadia Azmi. Thank you for watching and keep tuning in to TV3.